Welcome back, everybody, to the Schaefer Stock Market Podcast. This is Josh Selway talking to you guys again. If you're new here, we do these podcasts once a week, bringing you quick updates on the stock market and other financial news stories that we are watching over on schaefersresearch.com. If you want to check us out over there, we have a market news section and an intraday options trading stock market news blog, which we update throughout the trading day, or check out our free newsletters or some of our trading services as well. For those of you that have been listening, I want to thank you. A lot of new subscribers lately, and the listenership continues to grow. I think a lot of people want quick updates on the stock market. There's a lot of financial news options out there, but not a lot of quick rundowns on stock market news. So that's what we're trying to do here, and just offer another avenue for people to follow us and some of the things we are watching over here at Schaefer's Investment Research. This week, of course, I'm recording this on Wednesday, September 18th, the day of the Fed decision. The Fed did cut rates as was expected from Wall Street here, but it's not clear what the future path forward will be for interest rates, if they will cut again. The central bankers are split actually on what the path going forward will be, so that has stocks moving lower today. But looking back earlier in the week started off with a huge move in oil prices. Oil prices surged for their best day in years. This came after the drone strike in Saudi Arabia at production facilities over there. And of course, that helped the energy sector on Monday. Just looking at the top S&P performers, they were all names from the energy space. But then, of course, we have reports come out Tuesday that impact of that drone strike may not be as big on global oil supplies as many had anticipated. So oil prices again made a wild swing, this time to the downside. And then today we have oil prices again moving lower. And if you follow us on Instagram, we posted a few names that we were watching that made huge swings in both directions to start the week. A lot of volatility in the energy sector. And as I said, Monday was a huge update for many names. Almost all the names outperforming on the S&P 500 index the most were all from the energy sector. And then it was like vice versa on Tuesday. So we're monitoring that move in oil prices. And while that was going on, options trading on the United States Oil Fund, ticker USO, the ETF that tracks WTI there. That ETF obviously jumped in Monday's trading, moving lower with oil prices today. When we covered it on Tuesday, we were looking at the increased options trading on that ETF. It was quadruple the expected intraday amount there. December 1050 put was seeing extremely high action on USO. So some traders could be expecting more declines going forward if that was buying activity there. We have USO last seen trading just above the $12 level at $12.11. So those would definitely be out of the money puts there on USO. And actually that $10.50 level has served as technical support for that ETF in recent months. So that's interesting that those traders were targeting that strike in particular. Now, this is a perfect opportunity to do my weekly plug for our indicator of the week that is usually written by our senior quantitative analyst, Rocky White. And this week, Rocky was looking at big jumps in oil prices and seeing how historically oil prices have traded going forward following huge spikes in oil prices. So I highly recommend checking out the indicator of the week every single week, but particularly this week if you're interested in oil prices and what that historic move that we saw earlier in this week, it was a huge move from oil prices, what that can mean going forward, what similar moves in the past have meant for oil prices. So I strongly suggest checking that out as well. Now, what's interesting is that we have Iran getting blamed for this drone strike on Saudi Arabia. So not only has this put the energy sector in focus, but this also has obviously raised geopolitical tensions, and that has meant more focus on defense stocks. And we looked at the sector just this week, and we were looking at two names in particular. we are looking at Northrop Grumman, ticker NOC, and Lockheed Martin, LMT, two of the bigger names in that space. And what initially actually drew us to the defense sector was, in fact, that the S&P, the Spider S&P Aerospace and Defense ETF, XAR, was trading at record highs. And looking at that sector more closely, those two stocks that I just mentioned actually are sporting very cheap options premiums according to some of our internal readings here. So if you are interested in playing this space, if you see a rise in geopolitical tensions, which tend to be good for defense stocks, as people suggest that could mean more defense spending going forward, well, it could be a good time to get behind these stocks right now by using options. Okay, shifting gears here, I wanted to talk about Plug Power. That is ticker PLUG. That stock has been on the rise recently, and we originally covered it on Tuesday because it was in focus for this expanded partnership with European company Engie that was expanding their renewable energy services around the globe. Plug Power is known for making its fuel cells, so that will be what it will be doing with this partnership as well. And then just today, we have more news on the company that they are now targeting higher revenue, $1 billion in revenue actually by 2024. So they're setting a new milestone there, or a new goal that is, for 2024. And this also has the stock moving higher, up another 3.5% today. It's more than doubled on a year-to-date basis, trading at fresh highs. So certainly a name to watch going forward. And then we covered the options trading here on Plug Power. Again, this is a penny stock. It's trading right around right below $3 per share, and options traders have been taking notice here on Plug Power. Call trading at the major exchanges has been very popular in the past 2 weeks. This comes as the stock's relative 14-day relative strength index was already above 80, so it's continuing to go higher as the stock moves higher today. So this stock is running red hot, that is for sure. Notable open interest at the September 250 call. Obviously, the stock has run way past that strike, and there was also the September 3 strike as well, where call traders have been targeting. So still room to run there for traders who are targeting that strike and a potential breakout here for Plug Power. But obviously these call traders were onto something here. It was a good call by them to pick up those options, betting on a Plug Power breakout as the stock has been soaring. And as I said, more than doubled on a year-to-date basis, and it recently rallied from the 200-day moving average as well. So a nice move there from Plug Power. Another penny stock that options traders have been paying attention to is Lexicon Pharmaceuticals, ticker LXRX. That stock today, we noted, is pacing for its best close since a late July bear gap set it to fresh lows. But that stock up again. It's been rallying in recent days, been trading higher for about, looks like 7 of the past 8 days here, and options trading has been picking up in a big way. Overall options volume in today's action is pacing for the 100th annual percentile. Heavy call trading in particular, which is nothing new. In just the past 10 days, the major exchanges, more than 7 calls bought to open for every put. So that is another low price stock. Under $5 generally we classify as a penny stock, so Lexicon fits that billing. Another penny stock here that options traders have been taking interest in, so that'll be one to watch going forward as it tries to fill that bear gap from July. Again, it was trading near $6, fell all the way down near $1 per share, so a huge bear gap back in July for this stock, but lately it's been rallying higher. I definitely wanted to mention this note on Apple from Wedbush. Now, Wedbush came in, raised its iPhone 11 units delivered forecast here to up to 185 million. Actually expects Apple to top that number for fiscal year 2020. And really the note here was, we always have analysts coming in adjusting their iPhone targets and forecasts. But really the main takeaway from this note was that Wedbush is expecting the strength to be from demand in China. Obviously, Obviously, China's been a big area of concern for Apple in recent years, and then the trade war has taken those concerns to another level. But Wedbush here for the iPhone 11 likes what it's seeing from China, but it does also say that demand in the U.S. based on pre-order activity has been strong. So that's good news there for Apple for the new iPhone. Wedbush was saying that this is looking like it's going to be much better than the last two iPhone updates. So we'll see going forward. We're going to have a lot of other forecasts and projections for the iPhone going forward from other analysts, but Wedbush right now is liking what it's seeing for the iPhone 11. Bringing up a stock that I've mentioned a few times here because it's had such a big year is Zynga, ticker ZNGA. That stock has had a huge year. The video game maker, it makes games for mobile devices, and that is why a lot of analysts like it. We just had another analyst come in. This time it was brokerage firm Stephens that came in and actually named Zynga a best idea in the video game space. The theme here that a lot of analysts are predicting is that mobile gaming is going to continue to gain traction. Zynga does very well in the mobile gaming space. That's their niche. So they're projecting that as 5G rolls out, mobile gaming is going to be more popular. You're going to be able to do more on your mobile device. Therefore, that should benefit Zynga in the years ahead. And specifically here, Stephens said that Zynga is providing a very compelling risk-reward profile, projecting that upside that is potentially possible given its area in the mobile gaming market. If the growth is there, as some people are expecting, Zynga could be a great breakout candidate here. It's still trading down at $6 per share. And lastly, I wanted to mention this analyst note on Uber and Lyft. We had a bullish note come from HSBC. The analyst there actually upgraded both stocks to buy, saying that they've become too cheap. Trader pessimism has really taken over on these stocks after especially poor quarters reported recently, and he's saying that this could be a good time to strike on Uber and Lyft, potentially believing that the post-IPO buzz is worn off here, and obviously these stocks have struggled, but the brokerage firm, it was interesting, also said that it is possible that these companies could reach profitability. That is something many investors worry about, that these, especially Uber and Lyft, as far as other companies coming forward to the public markets. A lot of these younger companies really aren't on a path for profitability, but HSBC here sees the potential to be profitable for Uber and Lyft if they adjust their costs properly and rein in some of those costs as well. So we'll see if other analysts begin to move in on Uber and Lyft here now that their stocks have taken a bit of a hit. But I'm going to leave it right there for this episode of the Schaefer Stock Market Podcast. Thank you again for listening. Before I go, I wanted to also call out our Monday morning outlook that is written by our Senior VP of Research, Todd Salamone. Todd, this week gave you 2 ways to trade another short-term decline. Another interesting write-up there, so I urge you to go check that out. It could help you navigate these volatile times in the market. But again, thank you so much for listening. Check us out on Twitter, on Facebook, Instagram, Schaefer's across all those platforms, and on StockTwits as well. We're posting stuff over there to get more exposure to the trading day and some of the details of trades that we are looking at. But thank you so much for joining me again. I will talk to you guys next week.